Hello traders, The title of the video is combating part-time forex trading mistakes like a rapid intervention force, part 2. Have you watched part 1? If you did, well, thank you very much. If you have not yet watched part 1, please do so you may understand what we are talking about in this series of videos about combating part-time forex trading mistakes like a rapid intervention force. All right. Quickly, my friend. In part 1, we were talking about analyzing first the chart from a desktop or a laptop before executing the trade as a part-time forex trader from a smartphone, Google Pixel 2, or a tablet, iPad Pro. It is a mistake for a part-time forex trader to analyze a chart from a smartphone or a desktop. It is not the same thing as it is to analyze a chart from a desktop in comparison to a smartphone or a desktop. So please do watch part 1. In that part 1 again, we were talking about a lot of part-time forex traders that are failing to place a limit order to take a profit. As a part-time forex trader, you place a trade, you must set a limit order for your profit target. The third mistake that we have discussed in part 1 is that a lot of part-time forex traders are exposing themselves to too many risks. Instead of controlling only one or two trades, they open multiple trades, many trades, and they are exposing themselves. They are expanding, their risk by taking multiple trades. So those are the things we have discussed in part 1. So please do watch part 1 so you may understand more how to combat forex part-time trading mistake like a rapid intervention force. All right. In part 2, one more time, my friend, I will be sharing with traders how to combat another 3 specific part-time forex trading mistake. All right. So let's get started. Usually, part-time forex traders who are working full-time usually trade the Forex Asia session. So the Forex Asia session will start at midnight London time. Alright. When Tokyo is open, other traders may say at 2 a.m. London time when Hong Kong is open. So because a lot of traders will go to work 9 a.m. to 5 p.m. in London, alright, or in America, alright, as they come home after work, they want to trade the forex market. There's nothing wrong with that. If it's working for you, that's fine. But what we are trying to discuss here, how do you make it work better for you so you do not accumulate losses over the year without even feeling it? Alright? So a lot of those part-time forex traders often trade the Asia session. The Asia forex market is often a quiet trading session unless there are high impact economy news. In effect, the price often consolidates between 2 key levels. Commonly, many part-time FX traders often place their trade during the Asia session before going to bed. So what is happening, alright, I have done it myself. That's how I know it. And I do not want you to get into the same mess. Alright? So what I was doing before, I was placing my trade Asia session. So you are checking the market, alright, during the Asia session. You see your beautiful high probability trading setup, and then you are so excited and you place the trade, alright, and then you go to bed nicely, alright. And then you wake up in the morning when London is open. Where is the trade? It's gone. They take you out. It's a mistake. Don't do that, my friend. Don't do it. Don't place the trade during the Asia session and then go to bed only to see it disappear when you wake up in the morning as a forex trader. Am I shouting? All right. So get your attention. Don't get upset. All right. So they also leave those trades in place throughout the time when they are working full time. So they place those trades before going to bed. Sometimes they don't even check it before they go to work. And so they let those trades run throughout the day when they are at work. All right. Though sometimes that approach may be completely okay or fine, irregularity leads to consistent losses. Take it from me. Those methods of placing a trade during the Asia session, going to bed, or even let it run throughout the day, sometimes may work, sometimes may not work. But what I have observed is that the probability, the winning rate of those trading approach, okay, is completely useless. One should not get into them at all. It's not working. If it's working for you, then okay. But if it's not, give it up. All right. Most of those trades generate losses as soon as London is open. Because whenever a market is open, the market will adjust itself. This is what I've been sharing with traders for years. You want to sell. What a professional waiting for. They want to sell, but they want the price to go up first. You may say, Joe, it doesn't make any sense at all. I want to sell, now the price is going down. Yes, they want to sell, but before they sell, they want the price to go up. So a lot of ordinary traders will quickly sell because they want to sell. The price at the support level, they want to sell. They want to sell anywhere. They want to sell because there is a signal to sell. They don't want to be selective. They don't want to be defensive. So they sell. Now the professional push the price up. They are those ordinary traders, those retail traders are taken out of the trade. Is it the fault of the professional? No, it's not. Because one should always sell high and buy low. So when you want to sell, when you receive a sell signal and the price is still down, wait for your rally up. All right. So when the London is open, all right, the market, if the market is going to go down, all right, it will go. It try to go up first. You see most of the time. All right. If the market is about to go out, it will go down fast. People say it doesn't make sense. This is a market manipulation. No, 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 no. It's not market manipulation. Price must go up when people want to sell. Price must go down when people want to buy. You remember in an uptrend, we wait for the pullback. So it goes out, display a new high, and we want to pull back fast to retain that bullish trend line. You remember? That's what we are doing. So it's not a market manipulation. It's happening all over the place. A new high, you want to buy. It's going up. I want to buy. Here it is on the edge. Okay? So in many cases, the part-time traders are a part-time trader, okay, a typical part-time trader in many cases is correct about where the price is headed. But they are just careless about placing the trade before London is open. Best time to place a trade is after the first 30 minutes when London or New York is open. So this is the first trading mistake that I want to share with you today. In part 2, talking about combating part-time forex trading mistake like a rapid intervention force. All right. So like a rapid intervention force is urgent situation like the ambulance, like the police. You want to rush very, very fast to deal with the matter. So here we have a scenario when you have been doing something over the year and maybe you did not even know. So if you do not know, now you know. Do something about it like a rapid intervention force. Do not place any trade at all, even after during the Asia session. If it's good, sometimes it will work. I'm not saying it doesn't work all the time, but in the long run, you may notice that it's not working. If you manage to control it carefully, it's working for you, then you do not have to fix it. The second part-time forex trading mistake that I want to discuss today is this. This is concerning a part-time FSD traders. Are you a part-time FS day trader? Do you trade the forex market a part-time as a day trader? So this is your mistake. If a part-time day trader opens a trade during the London session and that trade is profitable enough, one must secure all gains or close the trade before New York opens. One will do the same thing after New York closes if one initiates a profitable forex day trade during the New York session. My warning to trader is this: do not let another market opening erase your initial day trade profit. Am I talking to myself? All right. So what am I talking about here? Okay. So you are a day trader. Okay. So you say, all right, first 30 minutes when market is open, I place my trade. I follow it. You are at work. So, okay, the trade was profitable. So you pretend to go to the toilet. You say to your boss, I'm going to the toilet. In the toilet, you switch on your phone. I know what you are doing, okay? You check your trade. It was profitable. 90 pip, 90. You say, ha, 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 ha. This thing is working beautifully. I should quit my job and trade full-time next. Don't quit your job yet. Okay, as a part-time FS day trader, you should, okay, either what you should have done, okay, you see it's improving. Minimum, the first thing you can do, if you are lazy or you are careless or you are naive like a child, the minimum you should do is now to move your stop loss to break even. So if the trade, that profitable trade, day trade, turn out to be a losing trade, you lose a zero. That's the minimum you should do. Or another day trader that do care about risk control, not to lose, not to lose, not to lose. All right, will at least move the stop loss maybe 40 pips down to secure 40 pips. So anything happen, he will get paid his 40 pips. That will be some little gesture that day trader, part-time day trader may do. Yes or no? If you disagree, let us know in a comment section so we may all come down on you like a brick of rock, all right? So, what am I talking about, my friend? A lot of forex traders, they see the trade is in profit, all right? So, they know that New York is about to open at 2:30 p.m. London time. That's 9:30 a.m. Eastern time. The difference between London time and New York is 5 hours. London is ahead 5 hours, okay, on top of Eastern time. So, okay, you say, all right. In 2 hours time, okay, New York is about to open. All right. A 4-hour candlestick bar is now closed when it's exactly 12 p.m. in London. So that's the first 4 hours since London is open at 8 a.m. So you say, well, George talked about this before. You check your smartphone, you see that you're in profit, you are part-time day trader. What should you do? Apart from what I've already discussed, moving your stop loss to break even, securing some gain, what else can you do, my friend? Don't be afraid, all right? I'm changing my voice to make it more interesting, that's all. What you can do, my friend, don't be greedy forex trader. You can grab that 90 pips because you are not full-time forex trader. 90 pips for a day trader, that's a lot. 50 pips for a day trader, that's a lot for one trade. 40 pips for a day trader, that's a lot for a day trader. In one day, one trade. You may close it completely and laugh all the way to your desk. The money is in your trading account. You can even transfer that money from your trading account straight away to your bank account and use it for your break or for your lunch. Now, this is to exaggerate a little bit, all right? You can bank it. You can close that trade straight away on the spot. or you can secure some of them if you don't want to. Okay. How would you feel after seeing 90 pips? You secure it to 40 pips. You did not take 90 pips. You move your stop loss to 40 pips. Now you get paid 40 pips instead of 90 pips. For more disciplined traders, that's okay. They can handle that. They will not even think of it. But for some trader, that can bother them the whole day. Say, oh, I could have taken 90 pips. Now I take only 40 pips. What are you going to do about it? It's a decision. So the first decision, apart from everything else that I have discussed, is to close that trade straight away and bank that profit. Okay, that's it. Before New York is open. Why? I've said it already. When a market opens, the market will adjust itself first. You remember, if they want to sell, the price will go up. If they want to buy, the price will go down first. So to avoid the adjustment of the market, when another market is about to open, as a day trader that place your trade during the London session, you must take defensive measures before New York is open to avoid that profitable day trade turn out to become a losing trade. So that's the second trading mistake that I want to discuss with you today. So my warning to traders is this: do not let another market opening, London opening, all right, talking about those who have placed their trade during the Asia session, New York opening, talking about those who have a profitable day trade during the London session. Now New York is about to open, or New York is about to close. Secure your gain, full stop. Do not let another market opening erase your initial day trade profit. So the third mistake that I want to discuss in part 2, talking about combating part-time forex trading mistake like a rapid intervention force, is this. Are you ready? All right. You ready for it? Oh, wow. That's what they say. Are you ready for it? Yes, I am ready for it. Okay, let's see. Trading risky or useless a financial instrument. Did you get that? You say you are ready for it. Did you get it? Like, how you call it? Okay, cricket. Right? The ball is coming. Are you ready to catch it? Okay, for a part-time FS Forex trader who is not in control of the trade 100%, so you are part-time Forex trader, you are not in control of the trade 100% because you are not sitting in front of the desk monitoring that trade. All right, you are not in control 100%. Just agree. That's it. So it will be prudent for a part-time Forex trader to stay away from risky and volatile currency pair such as, are you ready for it? A British pound, Japanese yen, Canadian dollar, Japanese yen, euro, Japanese yen, British pound, Canadian dollar, British pound, Swiss franc currency pair, or any currency pair that include the Japanese yen, yen currency pair, Japanese yen currency pair tend to be volatile. Another currency pair that may be useless for part-time FX traders is the euro Swiss franc. All in all, a part-time FX trader does not want to complicate things with those risky currency pair, especially if one is a beginner forex trader. Are you a beginner forex trader that is trading forex part-time? Do not trade, all right, useless or volatile currency pair. So generally speaking, currency pair ending with a Japanese yen tend to be volatile. So if somebody asks me, oh, which currency pair I should not trade as a beginner forex trader, or which currency pair is more likely to be challenging, I will say to them straight away, any currency pair that includes the Japanese yen, if you are a new forex trader or you do not want to struggle, you may put them aside. That will be your second choice. Then you may say to me, John, then which one should I trade then? Oh, right, my favorite currency pair is those that increase the Japanese yen. Then I will say to you, well, the most popular currency pair that most professional traders are trading is the euro dollar, the British pound Japanese yen, the Australian dollar US dollar, all right, the euro, the British pound, all right, the dollar yen sometimes with a question mark on it, the dollar Swiss franc. So those are the currency pair that most professionals are trading all the time. All right. So the point I'm making here, talking about the third trading mistake that a pattern forex trader must combat like a rapid intervention force, is that he or she should be selective about the financial instrument that he or she is trading. So a lot of pattern forex trader will complicate the matter more by trading those useless, well, that's the way I like to put it, euro, a Swiss franc for me, talking about my trading style, is a useless currency pair for me. Other trader may say, Joe, you don't know what you are talking about. I've made so much money trading the euro Swiss franc. You useless forex trader. And I will say to you, that's okay, keep it for yourself. But for me personally, it's a useless currency pair. And I'll say, all right, John, we disagree to disagree. We agree to disagree. And I say, all right, that's fine. Okay, so the point I'm making here, though I'm using all kind of funny accent to cheer you up a bit, all right, is that if a currency pair, well, how do you know that a currency pair is not working for you? So, for instance, a lot of traders, I will say to you, 50% of traders do not like the dollar yen because it gives them too much headache over the year, all right, and most of the time it ends up being a losing trade. So here you are, the same strategy that is working for the euro dollar, the Australian dollar, the British pound, US dollar, is not working for one particular currency pair or a group of currency pair. Will you be so stubborn or courageous? Try to win by all means, trading that stupid, useless currency pair day in, day out? No, you will stop trading that currency pair and look for a better one. You can quote me on that and say, George say, if it's not working, dump it. It's true. Well, it's money involved, all right? And I don't want trader to lose, all right? And your broker do not want you to lose. Most, okay, reputable brokers do care about their client. They don't want them to be out closing their trading account. They don't want to keep losing non-stop because they know that the guy is losing, is going to close the account soon. So for a broker, a new account, a new trading account is good news. But one close, a trading account that is closed is a very bad news. So therefore, yourself as a pattern forex trader, you should stay away completely, all right, from currency pairs that are not working for you. You concentrate only, or did somebody say, on Shark Tank, or Mr. Robert, I forget his name again in Shark Tank, okay, Herjavec said that to achieve success, okay, in business, you must stay focused. He said 100 times. And these are okay, experienced businessmen. Focus. It's true in everything. What is working, you scale it, yes or no. You work on that. You expand it. So the same thing as in trading. One currency pair, you dominate it. Dominate more. All right. Dominate it more. There are some professional traders that trade only one currency pair. Now, which currency pair are more difficult? Those including the yen. Have you managed to conquer them? If yes, then continue to trade them. That's okay. Have they been giving you headache? Stay away from them. Very simple. Stay away from them. Are there other currency pairs that you have never tried? Check with other traders at forexfactory.com, the forum, and know which one are they trading. Okay, good. All right. And then apply your trading method that you have mastered. So those are the three, okay, trading mistakes, okay, that I want to share with you today. All right. So I hope I have said enough. I have managed to get your attention. I have managed to brainwash you one more time again. Well, You say, George, are you brainwashing me? Yes, I did brainwash you today, with your permission, of course. All right. So what we were discussing today is very simple. All right. We talk about three specific trading mistakes that a part-time forex trader must avoid. I try to make it more entertaining, but it's educational video. My intention by making more entertaining is that you stay on and keep watching the video without even knowing that you have already watched 40 minutes of my voice, my funny accent. That's good. It's a bit of trick. Right? We learn from YouTube creators. That's good. Right? I hope that has been useful to you. So to summarize this tutorial, all right, a part-time forex trader that is working full-time, all right, must not place a trade during the Asia session, all right, and leave it open, okay, only to be kicked out when London is open. Very, 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 very important, all right. Best time to place a trade is after the first 30 minutes when London or New York is open. Majority of part-time forex traders are placing their trade during the Asia session only to see those trades disappear as soon as London is open because of the market forex market adjustment as soon as one market is open. We have also talked about FS day traders that are trading part-time. So a day trader, very, very important, that is in profit during the London session must either secure the gain or close completely the trade before New York is open. So because of the market adjustment, again, as a day trader, you are in profit in one section, trading section. Another market is about to open, talking about London is about to open, or New York is about to open, or New York is about to close. You want to secure your gain, so you do not see a profitable day trade that is turning into, all right, a losing trade. Do not let another market opening erase your initial day trade profit. The third part-time trading mistake that we have discussed today is to avoid trading risky or useless financial instruments. Financial instruments that are volatile, currency pair that are volatile, currency pair that are not working for you, currency pair that your broker are asking for a higher stop loss, okay, and it's not getting you anywhere. You should completely put a line between yourself and those currency pair, and you want to hug and embrace, so to speak, currency pair that have been friendlier to you. Well, this is the point of this tutorial. Okay? So this will conclude our discussion today about combating part-time forex trading mistake like a rapid intervention force, part 2. I believe you have watched part 1. You have managed to watch the full name for this tutorial. I would like to thank you for this opportunity for watching the video. I invite you now to follow me in part 3 when I will be talking again about 2 specific part-time trading mistakes that you must know if you are in full-time employment, if you have been trading forex part-time, whether as a day trader or swing trader. Follow me into part 3 so you may know everything, so you do not repeat the same mistake again. I've said in part 1 before that it's completely stupid, all right? In one area, in every domain, somebody who got the experience talking to you, and you completely ignore the person. You don't even want to listen to the person. You don't want to let the person finish to talk, all right? It's a stupid thing to do. If somebody has been there, done it, all right, been through all the trouble and experience, and they want to share something with you, and it's also free, give it a time and watch and make sure you listen at least before you make your decision to follow through or not to follow through. If you find this video truly useful, all right, let us know by giving us the thumbs up. If you dislike this tutorial because it has been a long form tutorial, don't mark it down. But if it's a useless recording, all right, that has not been useful to you, mark it down, all right? But if, all right, you find the thing that this is an essential tutorial that can help other forex part-time traders, feel free to share it on Google+, on Twitter, on Facebook, and also on Reddit. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about combating part-time forex trading mistakes like a rapid intervention force, part 2. See you in part 3. Happy trading to you all, and I speak to you as soon.